Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
David, welcome.
Hey guys, good morning.
Hey, David, how are you? Good to see you.
I'm doing well, Steve. Good to see you again.
So, yeah, Spencer basically, I think, just gave a nice little background. Bumped into David at Future Proof last week, which, I mean, the conference has gotten so big at this point. It's hard to actually find people. But I just saw David the last morning before we headed out. I said, oh, the music ETF, right? I've heard of this thing. We talked about it on the show, I think, a month or two ago. I'm not sure why. And there's a really interesting backstory. So I thought having David on the show, explain why he did this, right? Like, why the music industry. We told some of the guys on the team, there's not enough music stocks. There are. So I figured we'd dive in, just have a nice little conversation about it here today on the show.
Awesome, guys. Well, look, it was definitely a great conference. You had great bands. Third Eye Blind was awesome. Ex Ambassadors were awesome. DJ Quick, amazing. So, great conference there. So, look, as I told you when I met, I've been in the music industry for a really long time, for over 25 years, investing in public and private companies. And I realized like 2 years ago, there was no real liquid way for retail investors to get exposure to music. And there were so many companies out there. So last summer on July, I launched MUSQ, and today we're the first pure play music exchange traded fund, giving investors, a front row seat to the whole music industry across streaming, content, live music events, ticketing, equipment, tech, satellite, and radio. So we're here really to give retail investors exposure to domestic equities and foreign equities across the whole global music industry ecosystem.
I love it. What is the bullish thesis, I guess, for these streaming companies? Why is this such an exciting growth industry?
Yeah. So look, if you read the Goldman Sachs report, Music in the Air, Lisa Yang, the top analyst, the music's basically doubling between today and 2030. Okay. Paid streaming subscribers are going from 700 million to 1.3 billion, right? It's almost doubling. And music is under monetized. That's why you see companies like Spotify raising rates. They raised rates 2 quarters ago. They crushed earnings. They raised it again last quarter. They crushed earnings. The stock is up, 80% for the year, 150% over the last year, over the last 12 months. And it's growing at like 10 to 15% in the US and as high as 25 to 50% in the emerging markets. And when you look at cell phone penetration, I mean, you have 8 billion people on the planet, 7.2 billion people have a cell phone, and less than 10% have a paid streaming service. So the cost to enter all these emerging markets is zero, right? You just partner with a telco. And so streaming is just on steroids right now, and it's really explosively growing. And we have all the companies in our fund that capture all that growth.
Well, so this is almost like a cell phone adoption story. What were the cell phone stats, and then the percentage of people who have a streaming platform on their cell phones? What are those numbers again?
Right. So you have 8 billion people on the planet. 90% of this planet has a cell phone. Less than 10%, there are about 700 million paid streaming subscribers. And that number, according to Goldman Sachs, is going to 1.2 billion by 2030. Right. So it's almost.
Yeah. Why do you think it's so low? Like I would almost assume that everybody with a cell phone has a streaming service.
That's but not a paid streaming service, right? Because everyone historically equates music with radio. It's something that they shouldn't pay for. But now they realize that music's cheap. Music's undervalued. It's cheap to what you pay for HBO Go, for Netflix, for Hulu. So you have a deal. You have a bargain at $12 a month to get access to 200 million songs. You pay double that for Netflix, and you have to have all the other services too. So if you listen to JP Morgan, it's the best content story today because music's undervalued, music's under monetized. And we think music represents a very compelling investment opportunity for that reason.
Yeah, I like that. And if you think about it too, we're a decade into this streaming situation where at least Americans are getting really used to paying for 5, 6, 7 of these things, $10, $15 a month, right? You got the Hulu, you got the HBO, you got the Amazon. It's like it never ends. So we've been trained to pay a monthly service charge to watch stuff. I guess your idea and Goldman Sachs with the report that they wrote is that we're going to do the same thing with music, and then that's going to be adopted in a big way, but it hasn't yet.
Yeah, and you're going to pay more. I mean, every quarter now they're basically raising rates, not just, Spotify, but Apple, Amazon, Google, Tencent Music. And so what's happening is these revenues are growing massively. And just look at the stock. I mean, every quarter, Spotify is reporting record revenues. This past quarter was 246 million paid subscribers, and they're growing revenue from their existing subscribers and their incremental and their incremental and new subscribers. And what's happening is 70% of that revenue is now being passed down to the content owners, right? That's the deal. Those are called the total content. That's why you see all the record companies growing at 15 to 20% every quarter, because they're growing in tandem with the streaming companies. So the ecosystem is working together side by side. As the streaming companies grow, they pay more of that revenue out to all the labels and the publishing companies.
Now, a company like Spotify at this point, we can throw up the chart. I mean, look at this. This has been one of the better smaller tech stocks this bull cycle, back at those all-time highs already. It's made a monster move, trading from around 70 to about 370 today, just this cycle. It's not cheap at this point. I'm seeing like 150 times from price to earnings standpoint. But investors, you never know how much they're willing to pay for some of this growth. What really blows my mind is, and this is so on topic for today, I'm glad that we had you on the show actually today. We didn't plan this. China had a huge session overnight. Looks great out here today. But there's been one stock in the Chinese tech landscape that's been good this whole cycle, right? Baba's been bad. JD's been bad. They've all been bad. The Tencents have been bad. Baidu, oh my God, terrible. But if you look at Tencent Music, they're up the TME chart. I mean, this one's been fantastic. So it doesn't even matter that it's in China. There's just been a major headwind on Chinese stocks due to the government. None of them have done well. But this one, whatever the economics of their business are that you're describing, have been so good that it's like the market ignored kind of all those cautionary signs that are holding other Chinese companies back. This one's trending well. Here it is versus TME K-Web in the lower pane too, just showing how good it has been versus its peers. So this is their music streaming out there, if you want to talk about Tencent Music a little bit.
Yeah, no, look, Tencent Music after Spotify is the second biggest streaming service in the world, followed by Apple, then Amazon, and then Google. So look, you have 700 million paid streaming subscribers. 246 million paid streaming subscribers are Spotify. About 100 million or 110 million are Tencent. And then, the balance are Apple, Amazon, and Google. I like answering questions quickly. I see, David, why is Spot a lower allocation than Apple, Amazon, and Google? Look, all these companies are market cap weighted. Okay, so we've capped the big names at 5%. I had to include Apple, Amazon, and Google in the fund, guys, because they're the third, fourth, and fifth largest streaming companies in the world. They're still music companies, and they're a very important part of our business. So I wanted to include them. But Spotify's got a big weight. Tencent's got a big weight. I love these companies. I love the story. I love streaming. And look, and I think these companies are really positioned for more explosive growth ahead.
Listen, having Amazon, Google, and Apple up there as your top three holdings, what a nice anchor for the fund. I mean, these guys are going to be involved in everything. They're hard to beat. They're in all the major indexes. So I think that's nice that you have them as the largest weights. And then you got these little kickers with Spotify, Tencent Music. How about some of these other ones? Like, what is the story with Live Nation?
Yeah, I actually wanted to ask that because you mentioned the other industry groups. Can you talk about just the construction or the logic of the industry group inclusion there? Because, I have a little thing I wanted to bring up as well.
It's got to be like 75, 80% communication stocks.
Okay. Yes. Okay. 35% of this fund, guys, are all streaming stocks, the ones we just talked about, right? 35% are all content companies, right? So that's companies like Universal Music Group, Warner Music Group, Sony, companies like Hybe, which owns all the rights to Ariana Grande and Justin Bieber. These are South Korean companies like him in Taiwan. Those are the big content companies. Then about 10% of the fund are live music events and ticketing companies. So on the top holdings chart you just showed me, so companies like Live Nation obviously is our biggest position for live music. CTS Eventum, that company right there, is the counterpart for Live Nation. It's a German company, right? And then we have companies like Vivid Seats in the fund, and other smaller ticketing and live music companies. So that's 10%. And then 10% are, equipment and technology, and 10% are like companies like Yamaha, which are important because they're actually producing all the tools, all the keyboards, all the pianos. We wanted to include equipment manufacturers that are very part of, driving the AI and the blockchain. So those are the 5 different segments. But if you look here, we've got a mix of, domestic companies and foreign companies. Cube, that's a big South Korean company. South Korea is a massive market, right? We've got, I think, 10 or 12 companies in the fund from South Korea, companies like Genie Corp and Kakao, the biggest streaming companies, and then companies like Cube and YG Entertainment. So we've got a total of 40 companies in this fund across these 5 different buckets. I think Spencer just asked me a little bit, talk about the mechanics. Let me walk you through kind of how the eligibility requirements for these companies and how
Please.
we decide to include them. So I don't know if you guys have a chart that shows, but I can kind of walk through for the audience today. So we scrape the universe, guys, of all music companies around the world. All the companies that generate more than 50% of their revenues from music are eligible for inclusion in the fund, or they're a top 5 player in one of those 5 categories. So obviously Apple, Amazon, and Google don't have more than 50% of their revenues from music, right? That's obvious, but they are top 5 players, and so they're included. No company can be smaller than $100 million in market cap, and it has to have average daily trading liquidity of $600 or $500,000 a day. This fund gets rebalanced quarterly. So every quarter, if a company becomes too small, they get kicked off the index. If a company goes public, say through a SPAC, or a company may have grown, it becomes eligible for inclusion. And so every quarter we have a couple companies that come off and a few companies that may come on. For the most part, these companies, stay the same, just their weights would change. So all the companies are market cap weighted, and it gets rebalanced every quarter.
Is this primarily the growth story here? Is this really an emerging market situation? I'm still thinking back to the numbers that you gave us at the top of the interview, talking about how few people globally have streaming or paid streaming services, but do have cell phones. I feel like that mix would be far more favorable in emerging market countries.
Yeah, so the emerging markets are growing at like 25 to 40% right now. They're growing in excess of US. So US streaming is like 10 to 15%. Emerging
Wow, it's so
markets are
high.
like 25. That's Listen, I mean, think about, it's like you're already 5 times GDP in the US, and you're like, much higher than that in the emerging markets. And so this is a growth play. Music is a very aggressive international growth play.
Which one do you think has the most exciting growth story of the individual components?
Of all the stocks in the fund,
Yeah.
yeah, I mean, look, I like all the streaming companies.
Yeah.
I think those are really exciting. Love all the live music companies.
Yep.
Companies like South Korea, they can be a little bit cyclical. So some of the stocks have been down the last quarter. Because
Sure.
like BTS may have stopped touring, or
Right.
Blackpink maybe may stop touring, but once they start touring again, the stocks rip. And so we are in a little bit of a cyclical business. So some of these stocks, may perform better around Christmas time, or may perform better during tours. Like last summer, we had the Eras tour, we had the Renaissance tour. But here's what's exciting for investors, okay? We have the ecosystem for any artist, right? So you pick your favorite artist. Spencer, who's your favorite artist today?
John Mayer.
Okay, John Mayer is a great example. So John Mayer signed to Sony. Sony's in the fund. John Mayer has a deal with Live Nation. Live Nation's in the fund. So John Mayer also has a deal to perform at the Sphere. Sphere is
Nice.
also, by the way, I forgot to mention that stock's been on a tear. That's in
You-
our fund.
Really? Did you
Yeah.
listen to John Rogers' presentation at Future Proof? He loves this one. He wouldn't stop talking about it. Sure. Yeah, yeah. All
Sphere,
right. Good. Yeah.
Sphere. Look,
Oh, that
Sphere
was
is like another great example of a live music stock
Mhm.
that has just been on a tear. It's all about. I mean, I don't know if you guys have been out there, but the venue's unbelievable, and they're building another one in London. And so we have in the John Mayer example, Spencer. Like, we have all the companies in the ecosystem for you to participate in John Mayer. If you like Taylor Swift, she signed to Republic. Universal's in the fund. So that's how we're kind of giving. We really are giving investors exposure to like their favorite artist, to the ecosystem. We're letting them capture the growth around music,
Yeah.
and I think it's a great liquid way to invest in music.
David, who are the companies that are buying these music catalogs, and are they public?
Yeah, great question. So I included all the royalty trusts in this fund when we went public, but if you notice,
Oh,
many of them went private. So Hypnosis was a public trust, a royalty trust that got taken over by Blackstone. Roundhill Music Group was a royalty trust that got taken private or got bought by Concord. And then we have all the other majors actually have publishing companies, but we are giving investors exposure to all those deals. So if you looked at in the last like 5 years, you had Springsteen, Tom Petty, Paul
yeah.
Simon, Stevie Nicks, they all sold their catalogs. All those companies were in the fund. So you get exposure to all, whether it's the royalty trust or the majors, right? If there are any independents that are buying those publishing catalogs, they're not in the fund if they're not public. So, but if they are public, then they'll be included. And you are seeing more of these companies go public. You're also seeing more royalty trusts go public. Look, I've been in this business for a long time. That's my background. I've owned everything from Bill Monroe to Death Row. I mean, I had one of the biggest music companies in the world. I sold my company to KKR. It became BMG Rights Management. And I was going to do another publishing company, but I saw all these private equity firms, Blackstone, KKR, Apollo. They were all buying these catalogs. And by the way, they were paying like 20, 25 times, which are like 5% unlevered yields. If you look, investing in our fund is a far superior way to get exposure to music. If you look at the index going back over 5 years, in 2019, it was up 22%. In 2020, it was up 39%. In 2021, it was up 26%. Last year was up 22%. We are an uncorrelated fund of the market, right? So we are a very steady growth play for investors over the long term. And music's just too big to ignore today. You cannot ignore the growth of music and how music stocks are doing.
One of these private equity shops is probably ready to swoop in and get the Bad Boy record stuff for pennies on the dollar right now, I would imagine. That's what these guys do. I mean, no?
I mean, they probably could.
Yeah, well, so Bad Boy had a partnership with Arista Records, which is owned by BMG. So I don't know if Puffy still owns Bad Boy, and he may have to. He had to sell out of his interest in Revolt. The music, the TV network he had. And if he owns Bad Boy, he may need to sell it too. So ironic. When I was at Future Proof, they were playing all the Bad Boy songs. So I don't know what was going on over there.
Yeah, I noticed the same thing.
Yeah.
That's funny.
Yeah, well, we're going to lay off that topic for this morning.
Yeah, David, I want to ask you about this chart. Is there anything that would change these trends? Right, the trend, of course, being the streaming going parabolic and all the other revenues from all the other forms of media going down. Would anything change this, or is this just the way our life is now?
Yeah, no, look, nothing would change it. Look, let's not only tout all the great things. Look, AI is a risk today, right? You want to talk about AI, you do have fraud and you do have market saturation with AI. So that could potentially slow down some of the growth if all this white label music, gets flooded onto Spotify. You do have, fakes that are getting recorded that may, take some revenue away, from some of the labels. Universal Music Group had a revenue miss last quarter, by the way, because they miscalculated their revenue from Spotify. So the stock was down big last quarter because, Spotify, the way it's growing, it used to only be, music from the three majors. Now it's like audiobooks and it's podcasts. And so, they're growing, but they're not delivering that much, the same amount of revenue that they historically gave when they launched. So that could create, a slow in potentially for recorded music. But like I said, music's undervalued, music's undermonetized. On the flip side, AI is allowing more music to get recorded. You have more artists today that can record, full albums in their apartments, in their homes, and that's creating more music. And so it's a very healthy industry. Look, in 2020, about 24 years ago, right, was when Napster hit. And the industry went from a, $20 billion business and it dropped massively. Then Spotify got launched. And today the industry, the recorded industry alone is like close to a $50 billion business today. So it's more than doubled and rebounded. So even through periods of technological, call it disruption, right? Or I call it innovation, it always comes out ahead. And so we're going to hit a bump in the road with AI. But if you forecast like 10 years from now, I think the industry will wind up being double from where it is today.
I got to ask you, speaking of disruption, I think back to Pandora. When I was in high school and college, this was a mind-blowing technology. This was like artificial intelligence 15 years ago. I don't know how they did it. Whatever happened to them? Do people still use Pandora? Like, who bought them?
Yeah. So the answer to your question, Sirius Radio bought them. Okay. Tim Westergren was the founder and CEO, and he built an amazing algorithm for it.
Wow.
Backed out of Silicon Valley. And yeah, I mean, now think about all the derivative uses from Shazam that we have, and now AI is capitalizing on that. No, listen, and Spotify is now using AI. You type in any artist, you hit start radio, and it spits out 50 different songs that sound like your favorite artist. So yeah, AI is just great. AI is great for listening to music. It's great for discovery, and it's great for producing music.
Now, did Pandora, was that like a successful exit for them? I forget how they did publicly. It probably wasn't great.
Not great.
Right.
Yeah.
Is this like an early story of like some killer AI technology, but you just don't get any gains in the stock market, at least in their case? I don't know.
Yeah, look, it was CapEx intensive. They were building out, they were building out tech, and they were trying to scale it. A lot of these radio stocks, they require scale, to grow, and they're very capital intensive.
All right, one more before we let you go.
Yeah.
Podcasting, right? Are we at peak podcasting yet? The guys in the chat are talking about Joe Rogan. I know there's been a lot going on here. It seems like everybody has podcasts today. Do podcasts even move the needle? They're far less evergreen than music. For example, there's an episode and you want to listen to it today or tomorrow or the next day, but you're not going back a year later to listen to some old podcast episode. What are your thoughts on podcasts?
Yeah, no, podcasts are the new radio. I mean, if you look at all the different music companies are investing heavily. Live One, we have Live One in our fund. They own Slacker Radio, which is the service in every Tesla car that you buy. They bought Podcast One. Okay. And they're like doing tons of podcast deals. Spotify is investing heavily in podcasts. So is Apple Music. No, people want to listen to news. They want to listen to podcasts. Podcasts are a great way to, get incremental revenue from subscribers, from getting new subscribers. So I actually see it as like the new radio.
It's awesome.
Right. I have a couple quick ones. First, besides AI, what are some other risks we're not thinking about?
Look, piracy is always the biggest risk. Deep fakes are a big risk, right?
Yeah.
So copying and the reason for that is because you don't have any federal copyright protection in your voice, but that's changing right now.
Don't scare me like that.
Yeah. Even you, Spencer, we could take your voice. I could have my own radio show and sound like you if I wanted to.
Okay. Wonderful.
So that's getting changed. You got two bills before Congress, the No Deep Fakes Act, that are going to stop. They're going to make it a crime. You have the Elvis Act in Nashville, Tennessee, that makes it a crime now to lift somebody's voice. You can't do that. So look, that's all sort of connected to AI. Look, piracy is always a risk. Look, music's been a great business long term. It's come a long way since Thomas Edison invented the phonograph, right? And look where we are. It's gone through, tons of innovation, tons of disruption, from, acetate recordings to vinyl, to CDs, to cassettes, to MIDI disc, to compact disc, to Napster, to streaming. And so we're kind of like entering the next phase of whatever it is. What is post streaming, right? Is it AI? I mean, soon you'll just be able to just type, talk to Siri and have Siri deliver, hey, send me music for the day, right? And so music's an exciting journey. And what I was hoping to accomplish with this fund was really capture all the growth and innovation in all these companies, and give investors exposure to all these different areas and let them participate. Guys, to the audience out there, you've been consumers of music your entire lives. All you've done is given, artists from Steely Dan to, Zeppelin to Bob Dylan your money. Now you can actually own shares in a fund that pays you money, that pays you back. And because it was a very private industry for a long time, right? And that was the purpose of it, was, buy a couple of shares, put it in your portfolio, park it away and watch it grow.
This is great, David. I'm glad we had you on. This was a fun conversation. Spencer, you got anything else?
I was just hoping, just because you run an ETF, and I'm very interested in that industry. Just maybe if you could just talk a little bit about like the launch process and like the AUM and sort of how it came about. What was the reaction when you launched it, and how the fund has grown, either from an AUM standpoint or just from a market cap standpoint, just in the years since you launched it.
Sure. So I launched it. So I launched it. I launched MUSQ. You can see it in my background here. That was, the day we launched it on July 7th of 2023. So we're about just a little over a year old. We have close to $25 million in our fund. We have, anywhere from, 5 to 15,000 shares trading a day. And investors are, really liking it. I mean, we're in the process now of onboarding with a bunch of wirehouses and broker dealers. So I'm out there, now just, doing a lot of TV and interviews with you guys and just getting investors, excited about the fund. You have 4,000 ETFs out there, and you have $10 trillion of available capital. I have to believe some of that money, will be flowing into the fund. I do see, a question here. Why is trading volume so low? I mean, look, we're a new fund. 10% of all ETFs, guys, drive 90% of the trading volume. What's important is not what the trading volume is, but look at the AUM. Is it sticky? Are the companies performing well? Do you like the companies? We have trillions of dollars of liquidity in this fund. You could buy any share, any amount of shares that you wanted to. You're getting exposure to great companies. We're very transparent. Go to our website. You can look at the holdings. You can see the weights. That should be, what's driving your decision, not like the trading volume. But yeah, our goal is to obviously get trading volume up and grow it and get more institutional buying and get more retail investors excited about it. It's a new product. I mean, a year is a pretty new, I mean, some of these firms, they won't even take you until you have a 2 or 3 year track record. So
Yeah.
we're just marching towards that track record and getting as much, retail interest as we can into the fund. So then we can onboard with LPL and Raymond James, and then eventually get up to, Merrill and Morgan and JP Morgan, and then have them.
Once you're in the wirehouses, you're good to go.
These
Well,
these things take time.
Yeah.
I do love me a good niche ETF.
Oh yeah, I love it.
I think you did this in a really thoughtful way. I think you're really onto something here. The secular growth in this industry, it makes sense, and you do have a nice basket of names with international exposure. So good for you, and best of luck.
Steve, Spencer, thanks a lot, guys. I love your show, and thanks for
David.
having me on.